What you have today is the 60-minute version of this presentation. There is a 90 or 100-minute version of this presentation that I also give sometimes, but actually this 60-minute format is just right. We do move pretty quickly through the material, and sometimes that's a little complaint that people will make, is that we move pretty quickly, but really I think 60 minutes we are starting to stretch the outer limits of what people can tolerate on this kind of a tax subject. And so it's just about right. So just here in this month of February, I've had to blow apart the 1099 presentation and rebuild it. Because if we look at today's plan, item number 1, the 1099 NEC, a brand new form. Actually, it's not a brand new form. We'll talk about that in just a minute when we get to that segment. It's an old form being brought back to life, but it's new here in 2020. And so I had to redo the format of this presentation quite a bit because of the 1099 NEC. So we'll talk about that new form and just the basics of the 1099 NEC and 1099 miscellaneous. And we'll talk about due dates and penalties and how to get out of penalties. We also spend quite a bit of time on item number 4, employee versus contractor, because that ties into the 1099 discussion. How to tell the difference and why is it important to know the difference. And then we close by talking about the form 1099K, which actually has an interaction with the 1099 NEC or 1099 miscellaneous. So that's what we'll cover today in about 60 minutes of time. So what's new? I'm not going to click on this link here. In fact, the slides won't let me click on it, and that's okay. You can click on that link yourself and take a look at this new form, the 1099 NEC. This is the big news for 2020. Contract labor payments will no longer go in box 7 of the 1099 miscellaneous like they always used to. Instead, you will put contract labor pay in box 1 of the 1099 NEC. Now this is for 2020 1099s that are due in 2021. So for 2019 filings, technically, if there was contract labor pay on those 1099s, they were due January 31st. The reality is a lot of businesses will find, oops, we should have sent a 1099 to this person. And so in some cases, you might still be issuing a 1099 miscellaneous to a contractor. And that's okay, even though you might be a little late on getting it in. It's still okay to file it now. If you're filing it for 2019, you'll use the 1099 miscellaneous box 7 for the contract labor pay. But for anything paid in 2020, so for forms due next January of 2021, you'll use the 1099 NEC. This is an old form. It used to be used for this purpose through, I believe it was the 1982 tax year. And then it was retired. It was put out to pasture and was left there for almost 40 years. And now it's being brought back. So the 1099 miscellaneous is changing too, and we'll talk about those changes coming up in just a little bit. So let's back up a little bit and talk about the basics of 1099. So most of what we talk about today will be contract labor pay. So what used to be box 7 of the 1099 miscellaneous and now the box 1 of the 1099 NEC. That's where the vast majority of our time will be spent. We will talk about other boxes on the 1099 miscellaneous as well, like box 1 rent, box 2 royalties. And then later on we'll talk about the 1099K and its interaction with the 1099 miscellaneous and 1099 NEC. So who issues 1099s? The answer to that is businesses issue 1099. So if you're not in business, you don't have to issue 1099s, whether it's a 1099 miscellaneous or 1099 NEC. This comes from section 6041 of the tax code, where the wording is all persons engaged in a trade or business. Now here's the thing when we talk about the term business or the term person. The term person means all business entities. And that includes tax-exempt nonprofits like a 501c3, C4, C7. Section 6041 says, for 1099 purposes only, a nonprofit tax-exempt organization is considered to be a trade or business too, and thus has a 1099 reporting obligation. What about rental property? We don't go too deep into rental property. In fact, this bullet point here is all that we discussed today when it comes to rental property. There is a version of this presentation that I give for tax professionals where we spend a lot of time on the subject of rental property and whether a rental owner needs to issue 1099s. It all comes down to, does the rental activity meet the definition of a trade or business? And that's a surprisingly difficult question to answer. And we don't go any further down that road in this particular presentation. $600 is the key number for most of the boxes that we're focused on today. And you can see the different types of payments made in a business setting that might trigger a 1099 reporting obligation. So you can see contract labor goes on the 1099 NEC now. The other types of payments go on the 1099 miscellaneous. So rent would be box 1. Other income is box 3, medical payments are box 6. Payments to an attorney could go on either form, depending on what type of payment you're making, and we'll talk about that in just a couple of slides. If you're paying royalties, the royalty threshold, royalties are box 2. The royalty threshold is $10 or more, would trigger a 1099 reporting obligation. With backup withholding, that's another thing we talk about later on. Any amount of backup withholding, even $1 of backup withholding, triggers a 1099 obligation. So things such as purchasing supplies, you do not issue a 1099 for the purchase of supplies or the purchase of inventory, that sort of thing. Now, even if we go back a slide, so you've made one of these payments that might trigger a reporting obligation. You still don't send a 1099 to everybody, though, even if you made one of those types of payments. You really only send a 1099 to individuals or to partnerships, generally not to corporations. There are two big exceptions to that, which we talk about on the next slide. But in general, you don't send a 1099 to a corporation. Now, what about LLCs? LLCs get tricky. A lot of times people will say, I formed a corporation or I incorporated. And then you dig a little deeper and you realize they didn't. What they did is they formed an LLC. Forming an LLC is not incorporating. An LLC is not necessarily a corporation. The C stands for company, not corporation. LLC is limited liability company. And tax law says that LLCs get what's called default treatment under the tax law. So a one-person LLC, by default, is taxed as a sole proprietorship. So they would fall up here under the individual bucket. A multi-member LLC, and what that just means is that there's more than one owner. They, by default, are taxed as a partnership. So that type of LLC comes up here under the partnership bucket and would need a 1099. An LLC, though, of any size can elect to be taxed as a corporation. And in that case, they would fall under the corporate rules. Now, how do you know whether a business is taxed as an S Corp or a C Corp, so they're taxed as a corporation? Well, that's where the Form W-9 comes into play. which we talk about later on. The W-9 gathers all the basic information about the person or entity that you're paying, including their tax type. So they'll mark on the W-9 how they are taxed. And so that LLC that you're paying will mark, are they taxed as a sole proprietorship, are they taxed as a partnership, or are they taxed as an S-Corp or a C-Corp? Generally, you'll see that they're taxed as an S-Corp if they're taxed as a corporation at all. And it's very exciting. Sometimes on these presentation modules, the drawing tools don't always work. But I'm very glad that here on the Compliance IQ platform, I can draw on these slides. That's very exciting. So usually if an LLC is elected to be taxed as a corporation, they will have elected corporate tax treatment, or S-Corp tax treatment, not C-Corp tax treatment. So with corporations, there's two big scenarios where corporations get a 1099. One is for payment of medical or health care services. That's box 6, which we actually talk about on the next slide. And then the other is payment for legal services to a law firm. And there's two types of legal payments. One is for payment for ongoing legal work to your attorney. So your attorney does some work for you in a business setting, sends you an invoice, your business pays it. That is considered contract labor pay. Even if the attorney or their firm is a corporation, they still get a 1099. They'd get a 1099 NEC box 1 for that payment. And then there's lawsuit settlements. The technical 1099 term is gross proceeds paid to an attorney. That was box 14 of the 1099 miscellaneous. Now with the 2020 redesign, it's box 10 of the 1099 miscellaneous. So let's say that you lose a lawsuit and you have to pay out $10,000 in a settlement. That settlement money, if it flows through a law firm, you would send a 1099 miscellaneous, box 10, to that law firm. You probably need to send a 1099 miscellaneous to the other party in the settlement, too, with the amount reported as other income in box 3. And then the second scenario where corporations get a 1099 is payment for medical or healthcare services. And the IRS defines medical and healthcare services as the diagnosis, prevention, or management of injury, illness, or disease by a professional. And so if in the course of your business you pay a doctor, or you pay an ambulance service, or a nursing service, or something like that, remember we're talking about business transactions here, you would need to send a 1099 miscellaneous, box 6, to that individual or that organization, even if they're a corporation. The IRS also has said on this subject that that definition of medical and healthcare services is not limited to just services provided to humans. It applies to services provided to animals as well. So veterinarians need to be sent 1099s. Box 6 for payments for medical services. Remember, we're talking about business transactions here. So this isn't taking your family pet to the veterinarian. It's like a farm or a ranch, a business setting where payment is being made to a veterinarian. Next slide is talking about royalties. And so the question came up from a participant in a previous webinar about software as a service transactions. Software as a service payments. Are those payments reportable on a 1099 miscellaneous, and are they rent, or is it royalties? And there's not a solid answer to that because it really depends on what does the SaaS agreement say you're paying for. If you look at the instructions to the 1099 miscellaneous for royalties, it says royalties are payments for intangible property, and software is often considered an intangible. So perhaps your SaaS payment could be royalties, but in other places, the IRS says that leased software should be treated like any other lease or rental payment. So in other words, it would be considered rent. A lease is another term for rent. So it could be box 1 of the 1099 miscellaneous. It really depends on what does the SaaS agreement say you're paying for, and can you break it out? If you can't break it out, it's probably a rent payment. So just something to think about. I had never thought about a SaaS payment as being rent or royalties. I'd always just thought of it as a software payment, but then that question from that participant caused me to dig a little more deeply into this, and the end result is I'm not really giving you an answer on here other than to say it's complicated, and you've got to look at your SaaS agreement to see what exactly does it say you're paying for. All right, let's circle back to some of the changes to the 1099 miscellaneous for 2020. So we've talked about the 1099 NEC. Now we're talking about the 1099 miscellaneous. So there's the form is available, and actually we can scratch out the word draft. This just recently, like within the last 7 to 10 days or so, has been taken out of draft status. The form, I believe, is available now in its regular version or whatever without the word draft marked on the top of it. The 2020 version of the 1099 miscellaneous. So here's some of the changes. First of all, boxes 1 through 6 of the 1099 miscellaneous have not changed. So those all stay the same. Rent, royalties, other income, backup withholding, fishing boat proceeds, and medical and healthcare payments. Those are all the same as they currently are. The changes set in starting with box 7 and beyond. Yes, the header on this slide kind of obscures some of the wording on this first bullet point. Box 7 is still there, but it's no longer contract labor pay. It has to do with direct sales of $5,000 or more of consumer products to a buyer for resale. That had been box 9 on the old 1099. And you can see from there, I'm not going to read all of these to you, but you can see a lot of the boxes have changed. Gross proceeds paid to an attorney, that's lawsuit settlements. It was box 14, it's now box 10. That's probably the most notable change on the remainder of the 1099 from box 8 onward. All right, let's talk about due dates and sending these forms to the IRS and the penalties for late filing. So the 1099 miscellaneous had split due dates. If you were reporting box 7 contract labor pay on the 1099 miscellaneous, the due date was January 31st for providing the form to the IRS and the recipient. You had to have it to both by January 31st. And then you had a later due date for the 1099 miscellaneous if it was reporting anything else. End of February if filing on paper, or end of March if e-filing. So there were split due dates, and if you were mailing in the 1099s to the IRS, you had to do 2 separate mailings. You had to do one mailing for the box 7 1099s postmarked by January 31st, and then put the other 1099s in a separate mailing to the IRS. So this all goes away for 2020 because contract labor pay no longer goes on the 1099 miscellaneous. So the 1099 miscellaneous in its entirety will have the later due dates, end of February if filing on paper, end of March if e-filing. The 1099 NEC will have the January 31st due date. And what this slide is saying, and we already talked about this on the prior slide, 2 separate mailings for 2019 1099 filings. Your contract labor payments in box 7 of the 1099 miscellaneous need to go in one separate standalone mailing to the IRS, postmarked by January 31st, so that's already passed. And then your other 1099s go to the IRS in a separate mailing with a later due date. Again, this is a moot point starting with 2020 filings and the 1099 NEC coming into play. What's shown on your screen here are the penalties for late filing. And the penalties are higher the later that the form is filed. So one of the things I'm encountering a lot this particular month, February, is businesses saying, oops, we should have sent a 1099 to this guy too. Just go ahead and send it in. There is the possibility here, if you file it in February, the penalty would be $50 per form. I will tell you, in 11 years in practice and seeing clients file 1099s late, sometimes as much as 9 months late, I've never seen a penalty notice from the IRS, even on severely late 1099s. So I'm not saying no big deal, don't worry about it. What I am saying is if you discover that there's a 1099 that you should have sent out, just send it in and see what happens. Especially if you discover it here in February where the penalty is $50 per form, send it in now so at least you avoid potentially a $270 per form penalty if it's after August 1st when you send it in. And you'll see where it says small taxpayers here. What's the difference between a small taxpayer and a large taxpayer? The only difference is these ridiculously high maximum penalties that you see here and here and here are higher for large taxpayers and smaller for small taxpayers. So if you're filing here in the month of February a late form, you're only penalized on the first 3,890 forms that you file late. So if you have 5,000 late forms that you're filing, the penalty caps out after 3,890. Pretty sure nobody on today's webinar is filing that many 1099s. The all-time record on one of these presentations is 300. If you can beat 300, let me know. I would love to hear from you, and I can work that into my future presentation. So 300 is the most that any one person has said that they've ever filed in 1 year. Now, there's 4 different ways to get out of penalties if the IRS happens to try to penalize you. One is reasonable cause, which we really don't talk about because, as with anything with penalty relief with the IRS, trying to argue reasonable cause can be tricky because the IRS can just simply say, no, we don't buy that. We're penalizing you anyway. Inconsequential errors. This is something that does not prevent the IRS from processing the 1099, and this is mainly errors in addresses or first names. So we are right here, inconsequential errors. Did you know if your 1099 shows the wrong address, you do not have to issue a corrected 1099 to that recipient, and the IRS is not going to penalize you. They don't care about a person's address on the 1099. So what the IRS cares about is last names, social security numbers or EINs, and dollar amounts. There's a de minimis dollar amount penalty threshold which says that if you make an error in a dollar amount and that error is $100 or less, or if it's a backup withholding error, $25 or less, there is no penalty, and in fact, you don't even have to file a corrected form. And I've seen on some of the bigger operators out there that send out 1099s, especially like brokerages sending out 1099s, they'll actually say in some of their small print, they'll say if there's an error on the form and it's less than $100, we will not issue you a corrected 1099. And that's because of this, the de minimis dollar amount. This applies to anybody. Let's say that you paid a contractor $1,000, but when you were doing their 1099, your finger slipped and you accidentally typed 1001 on their form. That's a $1 error, which is less than $100. Therefore, it's a de minimis error, and you do not have to correct the form, and there is no penalty. And then there's a de minimis safe harbor. What this means is if you discover something that needs to be corrected on a 1099 that you filed, if you get corrections filed by August 1st, that includes the day of August 1st, and the number of forms that you're correcting is 10 or less, there is no penalty for sending in that correction. A question from someone, and I know I said that I would wait till the end to answer questions, but I might as well answer this one now. If you pay a vendor for supplies or raw materials, do you send a 1099? No. No, not for purchases of supplies, whether it's raw materials or goods for resale or whatever. That's not a 1099 scenario. Form W-9s. I'll go back a slide here. Reasonable cause. I said we don't really talk about this, and that's true, but one way that you could prove reasonable cause is through the W-9. So for example, let's say that a contractor marks that they are taxed as a corporation, and so you paid contract labor to that person who says they're taxed as an S corporation, and that payment is not a medical or health care payment, nor is it a payment to an attorney. Therefore, you don't send a 1099 to that person because they're a corporation. But what if they filled the W-9 out wrong? They said they're a corporation, but maybe they're not. Well, if you've got the W-9 that they filled out and they signed, that's a form of due diligence and a way that you can show reasonable cause for why you didn't send the 1099 to that person. So the W-9 it's a pretty straightforward, simple form. It's something you give to the other party and have them fill out. It gathers their name, their address, their social security number or EIN, and their tax type. So sole proprietor, partnership, corporation, or LLC, taxed as a corporation. And so that helps you then. You'll know whether or not you need to issue a 1099 to begin with, and if you do need to send one out, it gives you the information to issue correct 1099s. What if you paid someone and didn't get their social security number? You didn't have them fill out a W-9. That happens all the time. If you didn't get it at the time that you paid them, there's a high likelihood that they're never going to respond to you afterwards. So what do? Well, there's really not any IRS guidance on this subject. In the IRS's eyes, you shouldn't pay someone if you don't have their information. What I have seen from some other reputable accountants on this subject is they recommend just going ahead and issuing the 1099 but leaving the social security number spot blank. That way you can at least show that you tried to issue the 1099. And my response is that the bigger issue is, what happened. You paid someone, you didn't get their social security number. Shame on you. But if you're going to try to argue like a reasonable cause defense or something like that, you need to show that you have reformed. No, we didn't issue a 1099 to that guy. Or yes, we sent him a 1099, but we don't know what his social security number is, so we left it blank. That's bad. But what's really bad is if you don't take steps to fix the problem. And now, the first part of 2020, this is an excellent time to get policies in place to make sure that that problem doesn't happen again. And what's the best policy to put in place? Well, the best policy is no W-9, no pay. Every contractor must fill out a W-9, and if they don't, you don't pay them. And I encounter a lot of small businesses in particular, where the business owner, and it's always these smaller businesses where the business owner is the one who's heavily involved in all of this stuff. They don't like the idea of making contractors fill out a W-9. But I think that it's the best policy. We go back. I'm going to go back a couple of slides here to these penalties. These penalties are actually ×2, and here's why. Let's say that you're late issuing a 1099 to someone. You send it in February. So it's $50 per form, but what that really means is there's one penalty for being late providing the form to the other party, and there's a second penalty for being late on sending it to the IRS. So it's really $100 because it's $50 ×2. Now let's say that you know that you should be getting W-9s from contractors. You've had problems in the past. You know it's a problem that you haven't always gotten social security numbers from people, and you still don't reform. Look at the intentional disregard penalty. It's $550 per form with no maximum limit, and really that's $550 ×2, so $1,100. So on that one contractor where you're like, oh, I don't feel comfortable asking that contractor for a social security number. Well, you could be getting into intentional disregard territory where you could face a penalty of $1,100 for not sending that contractor a 1099. Why would you want to take that on? That risk of penalty, just make it a policy. Everybody has to fill out a W-9 or you don't pay them. Taxpayer identification number verification. This is optional. It is not required. But if you want to avoid an issue with mismatches on social security numbers or EINs on the forms that you're filling out, IRS eServices has a taxpayer identification number matching program that they offer. One of my goals for after April 15th is to go into eServices and see how that works. I'm not sure how it works. I know in the past on other things with eServices, I haven't been very impressed with eServices, but my understanding is that the IRS has made some upgrades on eServices, and so I want to go out and do some experimenting to see how that works. SSA also offers a service, and I include this only to drive home the point that the SSA website says it should only be used for W-2 verification. That's employee social security numbers, so should not be used for contractor social security number verification. Again, to be clear, this is optional. You don't have to do this. It's not required, but it is something that you might want to do to avoid matching issues, which is where we turn next. Other than penalty notices, the CP2100 is the big letter that you'll get from the IRS when there's a mismatch between what you put on the 1099 versus what's in the IRS's database for that person. And you can see that there's two different letters, a CP2100A and then a CP2100. And the CP2100, if you're filing 250 or more 1099s, you get extra special treatment. The IRS will send you this as a data file. Very exciting. The CP2100 just says that there's a mismatch issue, and then it gives you a list of the contractors that there's a problem with. So how do you respond to one of these letters? Well, what you do is you send out what's called a B notice, and suggested language for B notices can be found in IRS Publication 1281. You are responsible for knowing if it's the first or second B notice, and that's key because the B notice determines how long they have to respond and what they need to send you. If it's the first B notice, that means it's the first time there's been a problem with that contractor, they have 30 days to send correct information to you, or you'll have to start backup withholding on future payments to them. A second B notice means that it's the second time in a 3-year period that there has been a problem with their taxpayer ID number. In this case, again, they have 30 days to respond, but this time they also have to send proof of their taxpayer ID number. So if it's a Social Security number, for example, it would be a copy of their Social Security card. And if they don't do that, you have to do backup withholding on future payments. You do not submit corrected 1099s to the IRS when dealing with a CP 2100 notice. What you do is you simply update your records and do future 1099s correctly. Backup withholding, if you have to do backup withholding, the current rate is 24%. So if you pay a contractor $100 and that contractor is subject to backup withholding, you'll actually send $76 to the contractor and you'll keep $24 back as backup withholding. It's a similar concept to paying your employees, where you have their gross wages, but then out of that you take out all the different taxes for withholdings. It's the same concept. Withholdings, and the wording on this slide here, I just saw this, needs to be changed. You don't necessarily submit your withholdings on Form 945. Form 945 is a reconciliation form, kind of like the Form 941 that you use for reporting employee withholdings. It's an annual form, Form 945 is. It's due January 31st. And there's 2 ways of paying your backup withholding depending on how much backup withholding you have. So if you're doing $2,500 or less, it is true that you can submit with the Form 945. Oh, I can even move the lines around. That's very exciting. So if you're doing $2,500 or less, you can submit with the Form 945 by mailing a check along with the form. If you go over $2,500, then you have to do deposits of your backup withholding periodically, and you must do it electronically using the EFTPS system. That's the same as with payroll withholdings for your employees. You have to look at Publication 15. I think it's either page 11 or section 11. I can't remember now, talking off the top of my head, but there's a deposit schedule in Publication 15, where depending on how much backup withholding you do, it'll tell you how often you have to submit those withholdings. Let's talk about employee versus contractor. This ties into our discussion today because contractors get a 1099. Historically, a 1099 miscellaneous, and now for 2020 and going forward, a 1099 NEC. Employees, on the other hand, get a W-2. There's also a much greater commitment when you're dealing with employees. There's payroll taxes, workers' comp issues. It's just a much greater commitment. Contractors, there's really no issues. If you pay them more than $600, you send them a 1099. Otherwise, that's it. You just pay them and go. It's a smaller commitment. But if the IRS comes in and reclassifies your contractors as employees, it is a big deal and can be financially devastating. Now, you can't just say this person is a contractor, even though it's very common in the business world. When you want to pay someone as a contractor, you'll write it into a contract with them, and you'll say, we are treating you as an independent contractor, and you agree to this. And you get their signature on that piece of paper. Well, the IRS doesn't care about your piece of paper. They care about these 3 tests here at the bottom of the screen: behavioral control, financial control, nature of the relationship. What's really going on with that contractor? So behavioral control, this means how much control do you have over the work that's being done? And how much control do you have over the individual? If you're telling that person when to show up, how to do the job, and you provide the training and you supervise the work, all of that points toward the person being an employee. Contractors typically set their own schedule. They might work with you. You know, you might come to an agreement on when they're going to show up to do the job. But really, the contractor controls their schedule, and they do the job their way, because chances are, in a true contractor setting, a contractor is a separate business entity that theoretically should provide that service, whatever they're doing for you. They should hold themselves out in business as doing that for other businesses too, not just you. Financial control, this is the second test that the IRS looks at. Who has the financial risk in the relationship? For example, contractors typically use their own equipment to do a job. And if it breaks or needs maintenance, the contractor pays those costs. Employees typically use the employer's equipment, and the employer pays the maintenance costs. This last one here, too, is a big one. Contractors can suffer a loss on a job, and they're not guaranteed a minimum amount of pay necessarily. A contractor might bid a job at $1,000, and they get into it, and they determine that, oh, my costs are $1,200. And that contractor might just have to eat that loss. An employee situation, it would be extremely unusual for an employee to spend more of their own money on doing a job than they get paid in wages. That would be very, very unusual. And then the third test is nature of the relationship. So a few slides ago I said that a written contract, the IRS doesn't care about that written contract, and that is true. However, it can be a piece of evidence pointing toward that person being a contractor. In and of itself, it doesn't prove anything, but it can be one piece of evidence. Benefits is a big one. You really can't pay benefits to a contractor. Benefits implies that that person is your employee. And you also have to be careful of the law if you're paying benefits. One time in one of these presentations, someone said, well, I have a contractor that I really like, and so I put him in my 401k plan. Is that okay? And my response was, no, that's not okay. A contractor can't be in a 401k plan. Qualified plans, which is what a 401k is, the qualified plan law says that qualified plans are created for the benefit of employees of the employer. A contractor is not your employee. They can't be in your 401k plan. Permanency, what that means, and I really need to change the wording on this because I don't really like how that's worded. Here's an example. I have several clients who are photographers, and most of the time they work alone, but sometimes for like a big wedding or something on a weekend, they might call on one of their friends, and it always is literally one of their friends, to come help them for a few hours. And oftentimes it'll only be once or twice a year. They never call on the same friend twice, or if they do, it might be several years in between calling on that particular friend. And yes, the friend shows up when they're told to show up and they do what they're told to do, but it's a one-time job for a few hours on a Saturday, and that person will probably never get called on ever again to help. That would point toward a contractor relationship because it's not intended to be a permanent relationship. And then key services, what is it that the business does to make money in the real world? And is the worker doing that task? If so, that person is probably an employee. This slide is just saying sometimes the common sense test can help drive your thinking on this subject. Now, common sense usually has no place in the tax world. But on this subject, I think it can help. It won't give you the answer, but it can steer your thinking down the right path. Independent contractors are supposed to be separate business entities. Someone who gets a 1099, miscellaneous, or NEC, now I need to update the slides, will file a Schedule C as a sole proprietor. Business, does that make sense? Something I've encountered is business professionals hiring office assistants, and those assistants work a set schedule following that professional's office procedures under their supervision, but they pay that person as a contractor. And I'll say to that professional, I don't think that person's a contractor. And you know, everybody else always knows more than the tax professional, and so the response that I get is, oh, I've already looked at all of that. I let her work a flexible schedule. She can come in at 9 one day and 10 the next day and 8 the next day. I don't really care. So she sets her own hours, and so she's a contractor. Well, that is one piece of evidence if they're setting their own schedule, but the overwhelming weight of the rest of the stuff that you look at in that relationship points toward the person being an employee. And so again, the common sense test, it may not be able to give you the answer, but it should, I think, in most situations, help guide your thinking down the right path. Starting to run low on time here, and we've still got the 1099K segment to talk about, which I do want to spend some time on. So we won't spend a whole lot of time on this slide here about reimbursements to contractors. If you reimburse the contractor for an expense, is that contract labor pay? The answer is probably, unless it's paid, the reimbursement under an accountable plan, which means the contractor provides receipts to you and you reimburse based on those receipts. That is not contract labor pay. In fact, it doesn't go on a 1099 at all. You don't report it to the contractor at all. Instead, you as the paying business take the expense deduction on your tax return, but then you become responsible for the record keeping on that item. And if it's a meal expense, remember your meal expense for tax purposes is reduced by 50%. And you get saddled with that if you're the one paying the reimbursement. Also, the IRS specifically uses the term travel reimbursements when talking about reimbursements under an accountable plan. So proceed with caution if reimbursing other types of expenses. What if the invoice from the contractor separates out parts versus labor? All of that is still contract labor, even the parts portion, for two reasons. One is the invoice from the contractor does not satisfy the requirements of an accountable plan. If we go back here, contractor provides receipts. An invoice from the contractor in and of itself is not a receipt. Also, materials and supplies that are required to do the job are always contract labor pay, and that comes word for word from the 1099. This was in the 1099 miscellaneous instructions. It's now in the new instructions that are out there where the 1099 miscellaneous and 1099 NEC instructions are combined into one document. Basically, you include any parts or materials that you're paying for if the parts and materials are incidental to providing the service, so required for providing the service. Let's spend our last 5 minutes or so talking about the 1099K and how it interacts with the 1099 miscellaneous and 1099 NEC. So what is the 1099K? It's a form that you receive. It's not a form that you issue. It reports credit and debit card transactions and payments from PayPal, mainly third-party processors, which is what PayPal is. All credit and debit card transactions are reported. PayPal transactions are only reported if both of these thresholds here are passed. So again, this is a form you will receive, or as it ties into our discussion here, it's a form your contractor will receive. So anytime, let's say in your business, you accept credit cards. Every time you swipe someone's card, at the end of the year, your merchant processor, whoever you use for card swipes, they'll send you a 1099K showing the amount of credit card receipts that you had during the year. And again, as it ties into our discussion, it's a form your contractor will receive. So, if you pay a contractor with a credit or debit card or via PayPal, you do not issue a 1099 miscellaneous to the contractor because the transaction falls under the 1099K rules. And I put this set of slides at the end because by now, some of the steam is starting to run out. We're getting towards the end of a tax topic, and this usually jars people back into attention here when they hear this. So, here's the issue. The IRS gets the 1099 miscellaneous or 1099 NEC. They also get the 1099K, and it all goes into their computers for computer matching. When you pay someone with a credit or debit card or via PayPal, and you issue a 1099 miscellaneous for that transaction, what will happen is your 1099 miscellaneous or 1099 NEC goes into the IRS's computers, but then the 1099K from their merchant processor also goes into the IRS computers for that contractor. And so income to that contractor will be double counted. So this Treasury regulation here, some light reading for you during the week. The bottom line is this is what it says, which is you don't issue a 1099 miscellaneous or NEC if the payment falls under the 1099K rules. What about if you pay through PayPal and there's those 200 transaction $20,000 thresholds? You are not responsible for knowing if your contractor's total transactions for the year rise above those thresholds. You don't have to send them a 1099 miscellaneous or NEC, and you're not responsible for knowing if PayPal will issue a 1099K to the contractor. And the answer is yes, that creates a huge hole in income reporting. The IRS admits that, but that's how the regulations are written. You also have to be careful in PayPal. If you're using the friends and family option, no 1099K will be generated, and then you still would need to issue a 1099 miscellaneous or NEC. So make sure you or your contractor are not using the friends and family option within PayPal. If you make payments in a variety of methods, sometimes maybe with a credit card, sometimes with a check, you do not report on a 1099 miscellaneous the payments made with a card, but you would report the payments made by check, and there's a couple of examples here on this slide here that drive that home. What about ACH or EFT transactions? Those are still subject to 1099 miscellaneous or NEC reporting. An ACH transaction is not a payment card transaction. Payment card means credit card or debit card. And what about Venmo? Venmo is the one that people ask about the most, but really any payment app. It depends on what the app is. Is the app a third-party processor like PayPal is? Or is it simply connecting one bank account to another? If it legitimately is a third-party processor, such as PayPal is, then you would not issue a 1099 miscellaneous for payment made to a contractor using Venmo. My own opinion is that most of these apps are probably not third-party processors, and so your payment using Venmo, you would need to send a 1099 miscellaneous. Now, what if you load the payment app using your credit card or debit card? Do you meet the 1099K exception that way? The answer is no, because you have to look at how is the end payment to the contractor made. It's made with the app, not with the credit or debit card. And so again, it comes back to, is the app a third-party processor? Again, in my opinion, most of these apps probably are not. So they are not going to send a 1099K, which means you would need to issue a 1099 miscellaneous. We've reached the end of our presentation here.